welcome back. Let's break down this week in the markets. A lot shifted, few things surprised everyone, and some trends finally started to make sense. Here's the straight version of what really happened. Friday gave us a solid bounce, but didn't save the week. The S&P finished down about 1.9%. The Nasdaq was also lower, and even the Dow couldn't pull the week back into the green. So yes, Friday felt good, but it was basically the market putting a band-aid on a pretty rough few days. A lot of the movement came from the Fed chatter. Comments from the New York Fed pushed expectation for December rate cut above 70%. Whenever the market hears the word cut, everyone sits up a little straighter. But it all depends on upcoming data. One bad inflation print, and that optimism gets wiped out fast. Tech and AI names struggled through the week. Even with some strong earnings, the market just wasn't in a good mood to reward anything. Crypto took the bigger hit. Bitcoin is now down more than 30% from the October highs. It's becoming a pretty good gauge for risk appetite. When Bitcoin gets hit like this, people tend to pull back from risk across the board. Sentiment. Consumer sentiment slipped again, and this time the drop showed up even in a higher income household. That usually tells you people are starting to feel the combination of volatility and uncertainty. Volatility itself picked up too. The market felt jumpy all week, quick to react to every headline. Next week is loaded. We are getting a flood of economic data that was delayed by the government shutdown, so expect a heavy news cycle. Earnings are still rolling in as well, and a weak report from any big tech name could easily drag sentiment lower again. Seasonally, this period tends to be supportive. We have Thanksgiving coming up and Christmas, but this market hasn't been respecting seasonality much, so take it with caution. Alright, now let's look at the charts. I'll go through some key levels I'm watching and what would matter as we head into next week. On the spiders, as I zoom in, you can see this large long-term upsloping channel here, and on Thursday and Friday it did tag the the upper end of this upsloping channel. So it got saved and kept it above the upsloping channel on Friday, while it closes below it on Thursday, so it hasn't confirmed under it. If it gets under this, within this channel, I think there's more downside to go. The key levels I'm watching here are 652.84 right here and 663.30. And the key one is 652.84. If this doesn't hold, we're sitting up below this channel, the upper end of this channel, then I feel there's a lot more downside to go towards 633, 635 area, where I have this trend line drawn. And minimally, I would expect that this will touch the $640 at this 236 Fibonacci retracement. So we'll look for that and possibly a bounce up towards the holiday. But this downsloping trend line that I have here has to be broken in order to go higher. And short-term upside, I would say 683.38 gap fill on this white line, at this white line right here. On the QQQs, it's a little bit different, where we have the similar upsloping channel, where it closed below the upper end of the channel. On Thursday, as you can see, if I zoom in, you can see that it tagged the upper end of the channel and sold off. However, on Friday, it got saved above this trend line. I mean the support trend line here at 589.05. So we'll see. There might be some consolidation and then break further down, or consolidation to break this down sloping trend line. So that's my take on the market, the charts. Thanks for watching. If you found this helpful, hit like and subscribe. It really supports the channel. I'll see you in the next one.